All right, let's begin with the big story this evening, which is inflation. Retail inflation in India, measured by the Consumer Price Index, has spiked to a 17-month high in March. The number has come in at 6.95%, considerably higher than consensus estimates. In Feb, the number came in at just over 6%, which is anyway out of the RBI's tolerance band of 4 to 6%. Now, the RBI has already, last week that is, increased its projection for inflation in the current year while holding policy rates and its accommodative stance unchanged, though the Reserve Bank did make it clear that a change is imminent. Now, what's happened this time around? Food inflation is at the center of the problem, but what's worse is that this number doesn't capture the full pass-through of higher crude oil prices, which started increasing at the pump only from the 22nd of March. On the other side, IIP, which is industrial production, has also come in below estimates, and that's a problem as well. Now, to speak more about this and the impact that we're probably going to see on the Indian economy, I'm joined today by Siddhartha Sanyal, Chief Economist and Head Research at Bandhan Bank, Kumar Rajagopalan, CEO RAI, and Mayank Shah, Senior Category Head at Parle Products, will also be joining us on the show. Siddhartha, let me come to you first. Just with your overall assessment of what we're seeing as far as the CPI number has come, are you surprised? Is it higher than your expectations?
Yes, today's number is definitely higher than expectation, but generally we are keeping ourselves prepared for such surprises also, because at this moment there are multiple drivers of inflation which are posing threats to the overall headline number. And in this kind of a situation, many a times the spillover effects are strong. We are seeing quite a bit of pressure both on the commodity side and within commodity, food inflation, energy price inflation, industrial inflation, as well as services inflation, all seem to be pretty strong, not only at home or also internationally also. So we might have to embrace a few such surprises going ahead, unfortunately, in a direction which we might not like.
So, Mr. Sanyal, there was at one point where the widespread belief, and I don't know if it's a hope or belief or optimism, was that inflation that we're seeing was transitory. It was because COVID cases were coming down and then there was a sudden jump in demand. It seems to be fairly entrenched now. Would that be the right assessment? And is this just the beginning?
Well, there are quite a few factors which are making the situation quite complicated. In the last several months, almost throughout the COVID period, what we have witnessed, that even when there has been some demand moderation because of COVID cases at certain patches and in certain countries, the theme of supply disruption had always been more dominating, and that has been more lingering in nature. And in that kind of a situation, we have seen that even when demand is relatively modest in many countries, in case of many commodities and services, we have witnessed sticky inflation for a pretty long time. And now there had been an element of uncertainty spilling over to inflationary effects. In certain cases, commodity price, even currency movements are spilling over to inflationary effects. And given that it's quite widespread across so many countries, it can potentially be significantly more lingering than what we might be thinking, say, 6 months back.
Let me get some, sort of real world viewpoint on what inflation is doing to companies. We talked about how a lot of the high input costs that companies have been facing over the last year or so, in all categories pretty much, have now started getting passed on to the end consumer. And that's possibly a reflection of what we're seeing in that CPI number. Mayank, give us a sense of how much more there is to go. And are you beginning to see the impact of these cost increases on demand?
Well, not Ilona. The reason being, I think, in the initial days, thought that the way prices of input commodities were going up, it would be a little difficult. But if you look at the recent trends, I'm talking about last 1 week, 10 days, last 1 to 2 weeks, if I may say, then from the peaks, the prices have started receding. And while they may still not go down to the pre-geopolitical tension levels or Russia-Ukraine conflict levels, but they would still be much lower than the highs that we had seen about a month back. So we are optimistic that, we will not, going forward, will not see prices as high as what we've seen in last 1 month. They have started cooling off, and, they would further go down because they're clearly not sustainable. So that's a good thing.
What segments are you seeing prices peter out in, Mayank? Just curious, which areas are you seeing improvement? Because everything's on fire. Edible oil, you're saying, is improving?
It's gone down from, let's say, if we are talking about edible oils, they're cooling off, and if we talk about, the current spot rates, they are from what they were at one point in time. Palm was at about 180 rupees per liter. That has gone down. It's below 140 today in spot markets. Similarly, if you look at wheat, we are expecting bumper crop this year, and we are expecting prices to further cool down. So, while they peaked, going forward, I mean, clearly these prices are not sustainable given, enough supplies, at least of wheat. And even crude, if we talk about, I mean, crude, after reaching almost about $138, $140 per barrel is down. So I think going forward, we may not see prices sustaining at the levels which they were in last, 1 month or probably a month back. Given that, we are optimists that, probably the fear that, most companies had that prices may not cool off, I think has been on a wane. So we are hopeful and optimist that prices may go down. On the demand front that you are talking about, I think, we must look at demand, or rather consumers look at products from multiple point of view. So when they compare the prices of products, it's always relative. And I've shared this thing earlier as well. If you talk about biscuits, then biscuits are one of the, relatively lowest per kg priced food product. And hence, I think, in a situation like this, I think the least affected would be, biscuits kind of category or segment.
Okay, so, there's an interesting survey which said that about 24% of Indian homes are reducing their edible oil consumption due to high prices. And 67% of respondents who took part in that survey say they've pruned spending in other areas to pay for these higher edible oil prices. So the question ultimately is, and of course it'll be different for different categories, as Mayank is saying, people may not scrimp on the biscuits, they might scrimp on something else. How is this impacting discretionary spends? Mr. Rajagopalan, I want to come to you on this. To what extent have high input costs been passed on, you would say, in different categories at the retail level? And are you beginning to see an impact on demand?
Currently, I think we're just coming out of this whole restrictions of various types that happened. And therefore, there is this cheerfulness towards spending. However, customers are cautious. And the fact is that overall, if you really look at the overall business of retail, when we've just finished our survey on that, the overall growth has been 12% compared to pre-pandemic. So we are talking about 2022 versus 2019. And that's 12% increase in sales at value levels. But that's predominantly because there is lots more spending that's happened on electronics. There is some amount of spend that's happened on food, but not so much of spend on garments, not so much of spend on other discretionary items. So I think there is caution in the air for sure. When we talk about the inflation pressures, definitely garments have been seeing quite a bit of pressure. Thankfully, the government did not hike the rate on some of the lower priced garments as far as GST is concerned. And yet, almost 10 to 12% is the increase in the total garment prices. Some of the retailers have taken the shock, some of the manufacturers have taken the shock, which means that there is a pressure on margins. On the food part, as far as packaged commodities are concerned, we are already seeing the prices going up. And that's a worry. The worry is because we've often seen that when packaged commodities prices go up, they seldom ever come down. And that's not a very good trend for customers or for the overall market. When it comes to electronics, we've seen about 12% increase. That's all kinds of input costs have increased. The distribution has been really haphazard for most cases. We've seen issues around components for various products from across the world, and that's still there for electronics. And electronics is become in many ways an essential part of people's consumption, whether we want to acknowledge it or not, because the last 2 years have taught us that we need to have electronics and data connections with us. So overall, there is pressure. Retailers are taking part of the pressure. The manufacturers are taking part of the pressure. I'm sure we'll get to see that in the margin statement that will come out. I think we'll have to wait and watch as to where things go.
So as I understand it right now at the retail level, I'm sure in urban areas especially, people are still, trying to buy things they couldn't for a long time. So they're still in that whole pent-up demand kind of phase, easing of restrictions kind of phase. Now, let me come to Mr. Sanyal, because this is the tricky territory we're in. There is some pent-up demand, but how long will it last? On the other hand, now the understanding is perhaps the RBI will have to advance its plan to raise interest hikes. There are some assessments that will happen as early as June. Your growth momentum is not really on fire right now. A lot of geopolitical factors there as well, perhaps. So are we entering a fairly tricky space right now, Mr. Sanyal?
No doubt about that. It's a complicated situation at this moment. The question you started with is what is happening in case of consumption, discretionary consumption in particular. I would take a step back and try to see that what is happening in consumer confidence indicators. Now, if I go by the RBI's own indicators, very clearly there had been a massive drop in overall consumer confidence during the COVID period in 2020 itself. From about it had come down by close to 45-50% within a few months. Now, from that point onwards, we moved sideways for a very long time, and the indicator just started inching higher gradually. But still, the indicators are some good 30% lower compared to the pre-COVID levels when I'm talking about overall consumer confidence. And when I'm talking about consumer confidence, this consumer confidence is actually predominantly urban consumer confidence, right? Even in that case, there had been such a big dent in overall consumer confidence. Now, going ahead, if there are fresh question marks about growth, if there are increasingly more pressure on someone's discretionary income or the money left in the wallet after meeting the absolute necessities, that would have some kind of dampening effect going ahead. Leave apart the potential interest rate hike or liquidity tightening. So that way, it's not a very comfortable situation, no doubt about that. And policymakers would have to deal with a lot of patience and in a very delicate fashion, no doubt about that.
Let's come to you with a follow-up over there. So what can be done right now? There's some talk of reducing excise duty on fuel prices. You never know, will that happen, will that not happen, what will be the impact there? The chances of some relief on GST seem very unlikely as well. So where is really the room, Mr. Sanyal?
Well, I mean, there is no easy answer. Let us admit it straight away. And just reducing the excise duty or reducing the GST on certain commodities is also not a very easy option, because the government is willing to move in one particular direction, and it's a pretty slow and gradual process. In a knee-jerk reaction like this, they don't want to change the course of the overall movement, no doubt about that. But some continued relief we have seen, at least at the bottom end of the pyramid, lower strata of the socioeconomic pyramid, that we have witnessed some support that had been there in terms of free food grains, etc. In many cases that had got extended. So those kind of supports where it's absolutely necessary, possibly we get to see that. But given that the government is taking a bit of fiscal hit in the process, they will be somewhat reluctant to straight away offer an excise duty relief on a number of commodities, is my assessment. Also, what is important here, while inflation is really taking the center stage so far as monetary policy is concerned as well, it may not be such an easy and knee-jerk reaction from the RBI. They will possibly would have to also take into account so many other factors and follow a very, very nuanced and moderate approach for the next several months, given all the compulsions.
Yeah, absolutely. Mayank, you talked about, edible oil prices cooling off for a bit. Do you think that, FMCG companies just have to wait it out for some time now? Because if you see the overall commentary which is coming in from the space, there are concerns about rural demand. There are concerns about, how really they're going to deal with having to pass on further costs. All the majors have been hiking prices all through the beginning of this calendar year. I think at least 6, 7, 8 hikes from the major ones. Do you think that trend will continue?
No, as of now, we don't think that would continue. Some of the price hikes which were taken were necessary, given that, if I talk about inflation last year, prior to, the Russia-Ukraine conflict, there were some companies who can, or rather, I would say almost all companies were taken at least one round of price hike, primarily because inflation was, high at that time, and almost all input commodities where we're seeing a price hike or increase in prices. So that was done. Post that, I think, post Russia-Ukraine conflict, there's one more round of price hike which has happened, which is mostly in last 1.5 to 2 months. And while we expected that there would be further price hikes, if the prices of commodities sustain at those high levels, thankfully they're receding. And that probably makes us optimistic and, make us believe that as of now, as we speak, and given those prices, there may not be any further price hike going forward.
Mr. Rajagopalan, from the retail point of view, are you seeing, and you said your latest round of data is going to be out soon, are you seeing a disparity in the kind of products that people are willing to buy? Are you seeing a hit on discretionary items right now?
Not immediately, because it's after a long time that some of the festivals are being really celebrated. The marriages are now up and running in the markets. So I think people have just come back with a sense of cheer in their minds that they can do the normal things that they were not allowed to do for more than 2 years. So we believe that this could sustain for some time, like what you said, some pent-up demand, if you can call it that. We'll have to wait and watch. However, if customers see a sharp rise in any of the items' prices, then they'd start putting the brakes on. And that is the big worry. For example, garments. I mean, there is always this worry that if you really pass on the entire input cost to customers, customers would start thinking twice. Instead of buying 2 items, they'll start buying 1. Similarly, if you look at items which are related to, let's say, footwear and other wearable accessories, the same issues crop up. When it comes to food, we're just seeing customers going out and eating. So if you see the overall restaurant businesses, the business that's being done by quick service restaurants, that's all looking good. However, the minute customers start thinking that pockets are getting squeezed, they'd stop doing that. And that is the worry that we have.
Here's the thought, and let me come back to Mr. Sanyal for this. Which are the customers we're talking about? And this is the disparity that we've seen widen all through the pandemic and maybe getting wider now. So, for example, if I ask travel companies for bookings for this long weekend coming up, the Easter weekend, they'll say everything is booked. Your luxury hotels are absolutely packed. Your demand for EVs is growing. Your online food apps, etc., are seeing great traction. Do you think that we're seeing a widening ability to spend in different parts of the country, urban and rural?
Well, that's an excellent question, and as we had discussed about a potential K-shaped recovery for a pretty long time now, I think to some extent we are witnessing that particular phenomena panning out continue to pan out. For example, and a very important point Mr. Rajagopalan also just flagged, my sense is that in certain cases people are in a position to enjoy the sense of normalcy. In certain cases, they are celebrating that to some extent. That's why when there is a long weekend and there is not too much of a fear of COVID, there are enough people out there who have that particular ability to spend, that affordability to spend, and they don't mind spending quite a bit, spending a bit extra, 15-20% extra for one holiday which they are getting possibly after 2 years. So that particular segment will be spending. But I think the test of this particular phenomena will be there if the pressure on prices, etc., persists for a significantly long period of time. And while there can be sporadic and significant demand still in certain pockets, the steady uptick from consumption might still be a bit of a question mark, because this particular things will refer in certain pockets, but not across the spectrum. And mind it, in terms of India's growth drivers, a two-thirds comes from private consumption. Within that, a significant chunk, another two-thirds of that two-thirds actually come from non-discretionary consumption. So when those things come under some kind of challenge over a medium-term basis, that's a significant headwind for growth recovery in the coming months.
Well, inflation is here. There's no doubt about it. That figure is worrying. It doesn't take into account the crude price pass on at the pump. So we'll have to see what the next figure looks like, as well as what the next move from the central bank will be. Thank you so much to all of you for joining us on the lead debate this evening.